What's good? We are live. Welcome to the video. Today's video, I'm going to be breaking down how to trade cryptocurrencies. And we're going to be using a platform called tradingview.com. I'm going to give you guys some tips, some tricks, how I use the software, how I look at the charts, how I find opportunities to make money in these markets. So without further ado, let me pull up my screen here and let's jump right in. Boom. So we're going to be looking at Bitcoin versus the US dollar. Bitcoin is my favorite thing to trade, my favorite asset to invest in. Guys, what I'm going to be teaching you guys today is very basics concepts. These are not things that are easily learned. You have to spend time on, you have to put in the repetition, but I'm going to give you the formula that if you're able to learn this formula, apply it and use it for yourself, it's very, very profitable thing to understand about markets. And we're going to keep it simple. As you notice, first thing you see on my chart, I do not have any crazy lines. I do not have any indicators. I do not need any of those things. The only thing I need on this chart right here, guys, is price and time, right? And that's exactly what we have here on the y-axis here. You have your price. Of course, on the x-axis here, you have time. As the chart goes across, it's going through time, and as it goes up and down, it's going up and down in price, of course, right? These are the bare basics of a price chart. But these little things here, these bars, what these things are called are candlesticks, right? Being able to read and understand candlesticks is how you understand the market, guys, because the market is something that it's ebbing and flowing. This is something that's alive. This is something that it really comes down to human emotions and psychology for the reason why markets move up and down, right? The only reason any market moves up and down is because of conviction. It's because someone believes the price of something should be higher and they buy it. Somebody else thinks it should be lower and they sell it. Whoever has the most conviction and generally the most money is going to be able to move price in their direction, and then is ultimately going to win, right? And so this is a very psychological game. And being able to read these candlesticks is how you are able to read and interpret the market on that level. Like I said, we don't use technical patterns. We don't use indicators because one reason, they don't work. They simply don't work, right? If trading was that easy, if it were as simple as following XYZ, then buy, everyone would do it, right? But when you learn to understand these markets, you can learn to understand it just like anything else. And it's almost got to a level where you have an understanding of this market that is somewhat unconscious, right? If you ask any expert at what they do, they might even have trouble explaining to you how exactly they do what they do, but it's just simply the repetition, right? And guys, I've been trading these markets now for 3 years, and I'm telling you, it is simply that. You just have to put in the time, take the trades, and put in the reps, and you will develop the eye to see the market the way that it is, the way that it truly is, right? And what I'm going to break down to you guys is the bare concepts you need to know to really learn how to read the market. So let's get rid of the chart, and let's just start with the first basic concept of markets. Markets go up, markets go sideways, markets go down, right? Those are the only ways they can go, up, down, or sideways. And now when they move in that way, they're going to usually move in a specific way. As you can see, they don't move in straight lines. Markets move in waves. They make waves, right? Or they make waves that go sideways, which we would call consolidation or ranging. And they make waves that go downwards, right? So markets move in waves, right? And this wave right here, this is an uptrend, right? The market's making a wave up. This is what we would call bullish. Right here, as I said before, the market isn't really going any direction. It's actually just going sideways. We would call that consolidation. Consolidation. And then finally, when the market's moving downwards in a wave, right, we would call that bearish. as when the market is bearish. So they have that, you might have heard these terms before in the market, bearish and bullish, right? A bull swipes up, swipes its horns up, a bear claws down. That's a good way to remember it. But bullish, consolidation, bearish, right? And so remember, the market is always moving up, sideways, or down, right? And so that is the first thing that we want to identify every single time when we pull up a chart is what direction is the market going? What trend is this market? This is a bullish market, right? Because the market is going up, right? And now what we're looking at right now is a 1 hour time frame. And so when we identify a bullish market, what we want to look for, even if it's a bearish or consolidation, the thing we're looking for to help us identify whether it's bullish, bearish, or sideways is the highs and the lows. So in a bullish market, the market makes higher highs and higher lows. Another higher high, another higher low, right? Because this high goes higher than this high, and this low was higher than this low. Therefore, this is a higher low. And then now I just made another higher high. And so these are the things we're going to mark out. We're going to say, okay, that's the previous high. This is the previous low. Now we're making a new high, right? And then the market's pulling back and it's right here, right? And so this is our newest highest high and our previous low. So this is the low, this is the high. So we have a higher high and a higher low. What would be the reasonable thing to expect? Well, guys, in trading, the trend is your friend. The trend is your friend. And so as long as this thing is going to pull back, this is called a pullback when the market goes up and it pulls back, right? Or it's also called a retracement. These pullbacks, these are your opportunities in a bullish market to buy. Right here, right here. You want to buy the pullback. Very simple. You don't need to make this hard. Buy the pullback, right? You don't want to buy it up here, right? Because the price goes going down. You want to buy it at the low, anticipating the price will make another higher high, right? And as long as it keeps making higher highs and higher lows, price will keep going up. And these are your opportunities to buy. But we understand that also that markets have to go sideways. But before we talk about that, let's just look at an example of this right here. Right? Let's look at an example of just a bullish trend and some buying opportunities. So right here, guys, we have a bullish market, right? We're seeing the market go up, make a high, come back, make a low, make a higher high, make a low, right? And so we're looking for buys because we see the market's going higher. But I have the market on a replay tool right now. So it's a cool tool where you can rewind the market and practice and see the market play itself out. Right? And look at that. Market did actually now make another higher high, right? So we have our high, our low, and then a higher high. Right? And so this is our higher low, right? And so one thing you're going to learn is that these areas, and especially what happened right here, this is a very significant thing that happened, this movement right here, which you learn further down the road in your trading career. But this, going from the same basic structure that we had before of higher highs, higher lows, higher high, well, now when this market starts to pull back, right, we can reasonably expect that somewhere within here, the market is going to go higher, right? Hopefully, that's the trade idea that we can start to see, just very basic structure stuff, right? Obviously, there's a little more to it. But now that we're seeing the market starting to pull back, that gives us a general idea for a buy. And what happens? Oh, look at the market close back, makes a higher low, right? Makes a higher low. So now we got our higher high, higher low. And let's see if it goes and makes a new higher high. And there we go. It does, right? And so, guys, what's awesome about trading is that trading has these things when you understand the market. You don't need an indicator. You don't need a magic line. You don't need anything to tell you what price is going to do, what it's going to do. You can just see the wave. You see, look, it's making higher highs, higher lows, higher highs, higher lows. Well, let's see. Do you guys think it's going to make another higher low potentially before it makes another higher high? Well, that's what it's been doing. So let's see if that happens again. Boom. Look at that. And this is literally the price action of Bitcoin today. This is the price action that we had of Bitcoin today. Again, a very simple trend. of making higher highs and higher lows, right? And you guys are actually going to be able to learn how to identify where exactly those higher lows are going to be with further understanding of the market, further understanding of just liquidity, what moves prices up and down, and how the markets are really manipulated. And that is exactly why I was able to draw those lines with almost exact precision. Also because I did just look at the chart before we did this Excel, but that is what we learn how to do, is take trades off of these things. Like I said, that's a more advanced concept. Last thing I want to teach you here today on the basics of technical analysis, right, is just trading view, and also a little bit more of structure, you guys. So I like to keep my charts really clean, really simple. Like you said, I like to use even like a little marker just to identify highs and lows, sometimes to draw structure, whatever you need to do, right? And also, if you like a more clean chart, you can use these arrows to really identify where your structures are, right? Your high, that's your last low, right? And really, you want to have a clean chart. You really want to have a very clean chart, and I will show you most of my charts here, guys. They're very clean. I have a very maybe one or two lines of just zones that I'm looking for, right? Ethereum, actually, I can show you guys this trade idea right here. This is making higher highs and higher lows. So if it comes back to that area, I'm looking for that buy to go make it higher, similar to what we were looking at on Bitcoin. But the last thing I wanted to explain to you guys today here on this basics how to trade call is something called a break of structure, right? And so we had our structure here. We just went over this bullish structure here. We know that this is bearish structure here, right? And we also, if you're thinking about this a little more now, seeing that we just did a bullish example, you're going to realize that the market doesn't always go up. The market also goes down. And what I want to explain to you guys is that in a market, for example, we have a 1 hour time frame, right? We're on a 1 hour time frame right now, meaning that every candle is 1 hour price. You can look at time frames at 4 hours, meaning that it's going to be the same price chart, but now the candles are going to have more information in them. I'm going to show you an example of that real quick here. So with structure, you will have structures within structures. So in this bullish structure, you might have bullish structure right here on a smaller time frame, right? And then you will have bearish structure on that same smaller time frame right here, and then bullish structure. So you have structure within structure. And so one thing that is very useful to understand in trading is exactly at these points where on a higher time frame we have structure that is bullish, but maybe on the smaller time frame we have this bearish structure here that's going to switch over to bullish here, and that is what we want to know. And this is called a break of structure. So to redraw that, right? We have a overall big uptrend, right? The market's going to be making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs on a smaller time frame. And then eventually it's going to have to make the pullback, right? On the big time frame, as we saw in the past, right? And we like to anticipate these right here. And so now we're starting to see the market go lower low, lower high, lower low, lower high, lower low, lower high, lower low. And so on a smaller time frame, the market will actually be bearish, going down. But on the bigger time frame, we know that we are going up, right? And so what that pattern that's going to happen right here is when this bearish structure, the smaller time frame bearish structure, is going to switch to become bullish and start making higher highs. This is what I'm going to show you guys how to identify, because if you can identify the smaller time frame break of structure within the bigger time frame structure, those are the golden opportunities in the market. Again, guys, I'm just building on basic concepts here. So if that was a little tricky, I just would advise you to rewind the video, go watch just the basic structure again, do that 3 or 4 times until you got it down. Because what we're doing now is just adding the layers. We're adding the fact that there's smaller structure within the bigger structure. We're just adding another layer to it. And now I want to show you one more example of exactly that, right? And it comes right here, right? So on our 1 hour time frame, let's identify our structure. higher high, higher low, higher high, higher low, right? And I'm gonna bring it back to right here. Right? And we already know what's gonna happen, right? We already know that, so that's fine. We already know the market's gonna make a higher high, but we want to know where we can potentially find that trade where we can actually know to anticipate this higher low. And this is a little more advanced. Promise I'll get into this, identifying why we get these positions here is because we have a smaller time frame that we're going to zoom in on here. And we're going to see this bearish structure here. So we see our overall bullish structure, right? Let's get rid of these lines. Let's clean it up a little bit real quick. And now we're going to dive in here. So we know that, again, let me draw the pattern above here. I want to make this crystal for you guys. You have your bullish structure like this, right? And we're looking at it. Whoops, let me redraw that. I'm going to draw it just like that is here. We have your bullish structure like this and like this, right? And then we're looking at this move. We're looking at this move that comes down. And then we want to identify that reversal here to catch this to go higher. And remember, within this movement down, this retracement, I'm about to show you there's going to be that bearish structure in there. And we're going to see why that's so critical. So now let's jump into the 15-minute time frame. So on this 15-minute time frame, again, we have to be very aware here. We are within a bigger bullish structure. So you can see the same information, the same price, just more information zoomed in, right? And then we can see here on this 15-minute, this is why you need to stay organized and really zoom in your chart. Zoom in your chart so you can see the candles. Like if you can't see the candles very well, that's not zoomed in enough. And so that'll make making structure easy because you can see that we had bullish structure, right? Higher high, higher low, higher high, higher low, higher high. But then what happened is structure started actually going the opposite direction. Made a lower low, lower high, lower low, lower high, lower low, right? So you can see that structure, my bad, actually started switching. And we can see now we're looking at this bearish structure. So we're lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Lower high, lower low, right? And so as you can see here, this structure on the 15 minutes is definitely very bearish and continue to make lower lows and lower highs, right? When do we know that it's going to change directions? When the structure breaks. When the structure breaks. And that actually happens right there, right? And so as we see here, our structure, lower low, lower high, lower low, lower high, lower low, lower high, lower low, was broken when price lasted above and did not make a lower high, but actually made a higher high, right? And now what we're going to anticipate is that for it isn't going to continue to make lower lows anymore because of the fact that it made a new high. And so now that is our indication that because on the 15-minute, this bearish structure is now switched clearly, breaking all of these highs, not just one, not just in it, because as you can see before, there is these structures on the smaller time frame are very, very small, and you want to see clear indications, especially if we're looking for something on the bigger time frame, such as the 1 hour, right? But that's exactly what we got, is we got that structure break, and so now we're going to anticipate a pullback, right? We're going to anticipate the structure to be bullish, which is going to make higher highs and higher lows, right? So the next low we make, because the market goes in waves, right? It's not just going to keep going up. We're going to expect that it's going to make a higher low before then doing what? Continuing up to the upside. As we see, it takes its time and it makes a higher low and continues higher, right? And as you can see here, there's examples of this that you could dive in here on even smaller time frames, and the opportunities to find trades when you understand the trend are essentially unlimited, right? Yes, did we dive in there really deep, get really complicated? We definitely did, right? But I'm telling you, you can keep it as simple as even looking on a daily 4-hour, 1-hour chart, identifying the major trends, identifying the highs and the lows, right? Coming in here on a 1-hour opportunity. Like I said, the price action from today was so beautiful. Opportunity after opportunity to get into buy positions today. And so this is the basics of structure. Just to recap, guys, higher highs, higher lows, higher highs, higher lows, right? And that's bullish structure. A bearish structure is lower lows, lower highs, lower lows. And to recap the breakup structure, right? And this might help put it all together. When structure is coming down, and for example, on a bearish structure, the point at which structure breaks is when we actually cease to make a lower high, and let's say the price is like this, right? And that's why we always identify these levels, because as long as price respects this high, right, this structure is still bearish, still bearish. And when we break one of those levels, either making a new lower low, right? Now we just made a new lower low, so we're still bearish, and now this is the lower high. But when we break these highs, when we break the highs, this is now broken structure. And now we can anticipate this lower, higher low. This next low to be a higher low and to continue higher. This is the reversal. And this just comes from understanding basic structure, highs and lows. This is the pattern. And with a little more understanding of just liquidity, why stop losses are hit, why the market moves the way it does, how it's manipulated, why this pattern, why this is going to happen, why they break the structure, why this works every time. You know, you're going to get deeper into that with the Trade House, with IM, with the QC family. You know, if you want more information on that, just reach out to whoever sent you this YouTube page. Reach out to myself, send me a DM, whatever you got to do. Someone will get you taken care of. But guys, this is it. And just to do it one more time on the flip side, right? We can do a bullish reversal. Bullish structure, higher high, higher low, higher high, higher low, higher high, higher low. And when the prices are no longer making higher highs and higher lows, and they reverse and make a lower low, now we can anticipate this next price to not be going any higher because the low is broke, and this to be a higher low to sell it down, right? And so the same thing, we did a buys today. We were mostly looking at buys. We were looking at prices reversing from bearish structures into bullish structures within higher time frame bullish structures. Remember, this is just a pattern that's going to exist within a bigger time frame, right? But the same thing applies for the reverse on the sell side. So guys, like I said, this might have been a little tricky, a little complicated, but I advise you to go through it, watch it again, really take notes and really understand this. Of course, look at the bounce back sniper course, right? That is your 20-hour in-depth course on exactly this. This is your 30-minute breakdown of something that, you know, has taken me a good amount of time to learn, but also something that is very profitable skill set and information that I've been able to master. And so, yes, like, go through this, take your notes. Don't be overwhelmed. This is your first time. We did definitely get very advanced, but TradingView, again, this is the software where you can just start to look at these charts, start to mark the structure, one of the best things you can ever do. And I'll leave you guys with this, you know, and this is exactly how you learn how to trade. I gave you guys the sauce. I told you, you know, how to look for highs and lows, how to identify the market, whether it's going up, down, or sideways. And now what you have to do is you're going to have to apply that information, right? Go to tradingview.com, make an account. It's free. And, you know, get on here and start playing with this. You know, if you've used a computer before, you'll be fine. But it's a really easy to use software, and you can just start marking lines on your chart, right? Like I said, keep it clean, keep it simple. Mark one line on your chart. This is actually the line. This is the area that I'm going to be looking at today. I don't like using lines. I actually like using boxes. And so what I do is I mark a purple box on my chart. And this is the place where if price gets here, I'd actually be ready to take a trade, a buy actually, right? And so I'm going to leave this box here for the next couple of days and see how the price reacts. See if price does come into my zone. Maybe it has bearish small time frame structure. we get that flip, right? We get that reversal pattern and does something like that, right? Just like I showed you guys. And so leave those lines on your chart, see what happens, and then if you got it right, awesome, do it again, right? And that's actually how you learn, is by following the charts, putting your ideas down on the chart, and then seeing what happens, right? It's also super cool. You can take screenshots of your pictures, right? You can download them, you can keep them befores and afters, right? And so if you really, really want to learn this skill, those are things that you're going to want to do. You're going to want to keep a journal. You're going to want to track, record, identify why you got in the trades, right? Ask questions, like this is it, guys. This is the sauce. If you do these things, you practice risk management, it's only a matter of time before the profits will come. So that's it for today's basic lesson. I appreciate you guys. Hope you guys got a lot of value out of that. I'll see you on the next call. I'll see you on the next video. Appreciate you guys. Have a good day.